Hey guys, welcome back. Today is Friday, April 16, 2021. It's about almost 2 o'clock p.m. here Eastern Time. Just want to do a weekly video here. Let me know if this is something you guys would be interested in kind of doing more often. Maybe we could even do it as a live stream. That could be fun, a little bit of interaction with you guys. But basically what I want to do is go over my Tastyworks account, just look at the positions that I have on, since this week, and also some of the trades that I took this week as well. So I actually had a pretty good week of trading, both in my Tastyworks account as well as my day trade account on Lightspeed. So first of all, let's start out with our Tastyworks account and just talk about what we actually have open here. And one of the trades that I took this week on Amazon that actually worked out really well. It could have been much better. So just looking at what we actually have open here, you can see starting at the top, this is the micro contracts for the S&P Futures. That's the MES ticker symbol. I am long one contract on the futures there, and I'm cash flowing that with a short call at the 41.80 strike price. If you're not familiar, this is basically like a covered call, right? So my upside is capped because of the fact that I am short a naked call, but it's covered by that long contract on the futures there. The idea here is that basically I want to be long the market, but at the same time I want to be able to cash flow that position. So I sell a naked call above the current price, and if we get close enough to expiration where I can cash that out, then I just rinse and repeat and just keep selling covered calls against that long position on the futures there. If we actually go past that strike price, then I can roll it out to a later expiration date and to a higher strike price for a higher credit and just continue to cash flow it that way. But basically, that's the whole idea of this position is just to be able to generate income, just to, like I said, just cash flow. But as we stand right there, I mean, obviously we are down with still 7 days to go on that short call. There is still $100 of extrinsic value in there that, we're going to try to capture as much of that as we can. But we are green, of course, on that long contract on the futures because the market is up. Now, sort of a hedge on that position, we'll jump to the bottom here, is this VIX position I have open, which is basically just a short vertical call spread. So I'm short the 40 strike. I guess I'm actually sorry, it's not a short vertical spread. It's a debit vertical spread, if I can get this right. So I'm long the 25 call, and then I'm short the 40 call, which if we look at that on the risk graph here, you can see the way that this would actually work out is if we have a sudden spike in volatility, if the market all of a sudden sells off, obviously we're very extended up here, so that risk is there, then this would actually, this position would gain in value. And theoretically provide some kind of a hedge. Now, it's not a full hedge on my long position on MES, but it is some kind of a hedge. Obviously, if and when the market does have some type of big correction, we will always reassess all of our open positions, but this just provides a hedge on any long positions in the portfolio. You can see if we were to see implied volatility drop, or the VIX to increase to 40, this position would have a max P&L of $1,295 at expiration. But that is at expiration. So if it were to just jump up to 40 today, which is not going to happen, it'd still be up $700. So you can see this was a nice hedge to put on in the sense that it only cost about $210. $205. Yeah, it cost $205 for that hedge. So really not that much insurance, given the upside potential if the market does have some type of correction. The other positions that I have open here, this is the only other options position I have open. This is an iron condor that's already been adjusted on the corn futures. If you take a look at it in the risk graph, there's your iron condor. The original iron condor was short here. I'm short the 615 call. And then on this side, I'm short I forget which one that one is. I'm short the 515 put. So I'm short the 515 put, and I'm short the 615 call. That's the original iron condor. And then, of course, our protective legs on the call side is a 635 long and 495 long. I came in and adjusted it by adding in this one here, which is the short the 545, long the 525. So right here, I moved up or added to the put side, which obviously skewed this trade to the upside. It removed some of the risk on the upside there. And the reason being because if we go and look at the technical chart on this, you can see that corn futures is trying to break out from this big range of consolidation. Originally, it was kind of playing off of this range here, obviously looking for it to kind of stay in that general area. Our 615 strike price is still a ways away. It's still up there. But obviously what you see here is it's trying to break out. You can see here was the breakout high, came down, held it as support, and it's pushing higher. Basically just a little pullback here after this push higher. So if this breakout continues to hold, I want it to be obviously a little bit more protected on the upside. So that's why I made that adjustment. But of course that brought us in at the 540 strike price, which is 545 right here, right? So just below that 20 SMA. So obviously if we start to pull back below about 560, which is right around that breakout point there, then this is, I will have to start paying very close attention to this adjustment that I made to the trade here. But as of right now, there's nothing to do with this. It's obviously working for us. We still have, overall, we still have $403 of extrinsic value in that position. I'm not planning to hold till expiration, but of course that's what we would need to do to realize all of that. We're nicely positioned in the iron condor, so right now we just need time to work for us. You can see that theta-wise, we're going to be losing about 8 points a day on that, so we just need more passage of time for that to play out a little bit more for us profitably. The only other position I have here is I simply bought 3 shares on that new IPO coin. And just kind of legging in a little bit, you know, only looking at about $1,000 of capital involved in that. Now, the other interesting trade that I took this week, which is closed, it was simply an overnight hold, was on Amazon. We'll look at the technical charts here in a minute, but if we go and take a look at the activity on this, I actually have a working order for a butterfly here, which is probably not going to fill. I'll just have it sitting there so I can watch the pricing on it for today only. But the trade that I'm talking about here is $18.60 debit to put on a put vertical spread. So this was on April 13th, right at the close. You can see literally getting filled 1 minute till the close. So of course that's $1,800 of capital to put this trade on. I was long the 3400 put and short the 3350 put. Was looking for a gap down and possibly a move lower the next day. And looking at my notes here, my profit target on that was going to be about 2450 pricing on the spread. You see I actually closed it out for 2085, so didn't quite get what I wanted on it, but I'll talk about why that is here in just a minute. So let's just go ahead and hop over to our charts and we go ahead and jump into that aspect of it here. And then we'll look at the market and everything as well. So going over to Amazon and just grab my drawing tools. You can see the day in question that we put the trade on was right here. All right, so we had this nice gravestone doji that formed on this day right up into the close. I saw that and realized, okay, this looks really good for a gap down and a move lower the next day. So let's go ahead and see if we can't open a put vertical at that 3,400 strike price, which is right where Amazon was trading, right at 3,400. And then again, I went short the 3,350, which gave me a nice risk reward on the trade. So really the most this spread could have paid out was, I think, around almost $4,000. And really I was only looking to capture about 600 or so on this trade. So if we tighten this up on the chart, I'll just show you kind of what I was looking at or what the trade plan was here. So I basically wanted to see a gap down the next day and then see a move down a little below this trend line, kind of around to 33.75. And it kind of calculated that if we got that move, the spread should be trading around $24.50. And you know, with an 1860 entry, that would have been over a $600 winner. So that would have been a nice little winner. Of course, in hindsight, you can see if I had held that spread all day, it would have paid out over $2,000. So that definitely hurt a little bit there. But if we widen the chart out here, I'll just show you again a little bit from a macro sense why that was so important. It wasn't just the fact that we had a gravestone doji there. It was the fact, it was multiple facts, right? Multiple things that kind of gave me conviction to take the trade. So you have this downtrend line here, got it anchored to that lower high, and this is what we had just traded into the prior day, and then we gapped up higher and had one last push right up into this 34.34, which is a pivot high from that lower high that trend is anchored to. So obviously that's a significant macro level. You're getting that rejection off of that level on that day. In addition, it's had this extended run up. You can see on this day here how extended away from that daily 9 EMA that we were. So it made sense, being that macro level and the extension of the run up, that Amazon would probably see some kind of a pullback. But given how bullish the market was, I didn't necessarily expect that it would be that big in one day. Turned out that that was the case along with the rest of the market. So anyways, what happened is that morning, Amazon started to sell off right from the gate. And if we go over and take a look let's put this on a 2-minute chart so you guys can see what this looked like. And this is on 4/14, and we'll just put this kind of right at the open. All right, there you go. So you can see right out of the gate what Amazon did on this day. It actually opened with a gap higher, right? So we closed down here, and Amazon moved up a little bit higher in pre-market, opened with a little bit of a gap higher, and then dumped straight out of the gate. Now, the problem with this is typically when you get a dump straight out of the gate, usually I'm thinking more contrarian. I'm looking for it to find support, start basing, and go long, right? And so the fact that it actually dumped straight out of the gate was less preferable for me. And then on top of that, when it did come down here and it started holding, the S&P Futures or SPY was ripping higher. And Amazon and the SPY are very closely kind of correlated. So if the SPY is ripping higher, it's generally going to be very difficult for Amazon to sell off. It will almost always move with the SPY. Now, again, given that technical macro context from the daily chart, it made complete sense. But we did have that divergence there. And so when Amazon came down, it was basing, it was holding right here. I was up on the spread, a few $100s or so. It kept holding. SPY was just ripping faces off. And so I just told myself, I think I'm just going to go ahead and take it off right here. I certainly don't want to let a green trade go red on me. With the SPY still ripping, obviously, it seems like things might still be strong. So I took the trade off. You saw there, I made a couple $100 on it after fees and commissions, but really frustrating to see that it just beautifully ended up doing what I wanted it to do. But that's the way it goes. So otherwise, I mean, big potential in that trade, just didn't quite realize what I wanted to out of it, but a really good spot on that, and execution of that trade right into the close. So that was about it on the Tastyworks account. Now I did take a couple of really good trades in my day trade account on Tesla this week, and I guess we'll go over those in just a minute. Let's go ahead and make a run through the markets. Now, of course, it is still Friday during the day, so things could change into the close by the time I finish this video and get it out to you guys. But let's go ahead and start off by taking a look at our S&P futures here, and we'll switch back over here to our usual charts. All right, so looking at your daily charts, we broke out from the all-time high yesterday. Nice big bullish day higher, and so far we are pushing up a little bit higher. New all-time high today, technically. So obviously we're going to adjust that. New all-time high today, technically, but overall just pretty much balancing from what I'm seeing here in the marketplace. We'll look at the internals as well, but so far it just seems like we are kind of having a bit of a balancing day, which is bullish, right? We're just still not finding really sellers interested in showing up yet. So as long as we just continue to balance and consolidate, this is definitely bullish. So I would not be surprised at all to see the market continue to go higher, even though we've had this incredible run up. And again, when you kind of zoom things out, you can see, yes, we've had a macro breakout here, but we are getting kind of ahead of ourselves. It's not that it can't keep going, but we always want to be aware of, where we are. And if we look at the chart here, you can see how extended away from that 20 MA we are. Okay, so there doesn't mean that we can't still go higher. I wouldn't be surprised at all to see the S&P head for that 4,200, but just kind of keep that in mind. Always keep that in mind where we are. And you compare that to SPY. So let's just take a look at SPY here. And on SPY, we are forming a little bit of a hanging man doji up here. We'll see how we close today, but it doesn't necessarily mean anything on its own, but it's just something to make note of. We are extended. We are obviously still hanging out up here, but overall the context still remains bullish. Take a look at your Nasdaq futures here, and we broke the all-time high. Let's zoom out on the daily chart. You can see there was that all-time high, right? So we broke it, pulled down below it the next day, and then right back above it and consolidating. So of course that does still look bullish as well. You take a look at the Qs, of course, the ETF for the Nasdaq, and again there was that trigger point there on the 338.19 breakout of the all-time high, and again pushing back right back above it and consolidating up here. So still just really looking bullish here, guys. And I'll just also mention that the VIX is sitting at around 16. That's pretty low, 1628. Obviously, it's numbers we haven't seen in quite a long time. Moving over here to our IWM, Small Cap Russell 2000 ETF here. One thing that we've been talking about is this macro trend here, right? This is obviously very big support. We've held it 3 times now, every time we pull down into it. But I'd also mention that you can see a very clear and definitive head and shoulders pattern forming here, right? There's your classic head and shoulders pattern forming. So if price moves back down into this trend, this very macro trend, very big support, that's your neckline for that head and shoulders. If we start to see price breaching that, that could be a very big sell signal here on the IWM. So something to keep in mind. What we would not want to see for this pattern is to see it come back up to the all-time high. That would obviously negate that head and shoulders pattern that is obviously appearing so far here on IWM. So something to keep on, on watch. Let's see if it in fact wants to come down and confirm below the neckline or not. As of right now, just pretty much holding up here above your moving averages. Okay, so a quick run through our sectors, starting out as always with our heaviest weight, technology. This is very indicative of what the Q's chart looks like. Huge run up, lots of poor structure as we discussed, lots of gaps left behind. But we did pull down just shy of that 9 EMA a couple days ago and right back up to all-time high. So pretty much just consolidating and resting up here. Is this going to be a topping point where we finally pull back a little bit? Who knows, obviously, but just something to be aware of. As of right now, we continue to hold and we continue to remain fairly strong in the market. So there's just lack of sellers at the end of the day, guys. I mean, if you have a group of people who are all going one direction and you have one person, who thinks the market's oversold, overbought rather, and you should be shorting, it's really hard to convince everyone else to do that, right? It's a momentum train that you just can't stop on a dime, right? So eventually the party will end, but as of right now, it doesn't look that way. Looking at healthcare, breakout higher, right? So continues to be strong there. It is up today, obviously, from the open and gaps higher there. You've got consumer discretionary, again, still bullish, still looks good. Financials actually, they reported earnings this week, some of the big banks. Not really a big reaction to that. Pull back into the 9 EMA and really kind of just continuing to push higher here as well. You've got communication resting after getting back up here to 52-week highs. So that looks good. Consumer staples breaking out higher after this flag pattern here, just basically consolidated, pushed up higher, consolidated, and now pushing higher, right? So strength in consumer staples. Industrials are down from the open, but they did open with a gap up. So just kind of pulling back and filling that gap. Basic materials, big gap higher here and consolidating. So they are up from the close, basically flat on the day from the opening price. Utilities, this is something worth mentioning here. Big move up here in utilities. So this is something to kind of keep an eye on. Usually if there's a risk of the market kind of selling off, people will be looking for more safe havens to put their money in during any downturn in the market. And utilities is one of those. Now, we look at this in the grand scale, like kind of zoom out on that macro scale. You can see that utilities are still ways off from their all-time high. They're coming up to pivot resistance right here as well, around 68 or so. So right now on its own, it doesn't necessarily mean anything, but it's something to pay attention to. If the market is just going sideways, we're kind of seeing a pause in the market, but utilities start to really rally and then bonds start to rally. These could be warning signs, but again, on their own don't necessarily mean anything. And utilities still has a long ways to go before they get to all-time high. So interesting, but they are rallying today as well. Just a couple more. You have real estate gapping higher and so far just consolidating above the gap. XLE or energy sector, again, kind of stuck right here in all these moving averages, but basically just consolidating there. And you've got your semiconductor ETF, again, just kind of flagging right here, holding that 9 EMA after the push up. Will we see another push higher? We don't know, but NVDA is one that I want to talk about that has been really, really strong. So actually, before we jump into our individual stocks, let's make a run through the internals and then we'll look at the market profile and then we'll flip through our favorite stocks. So let me just switch over to our internals here. And again, I'll just grab my drawing tool. So starting out with our tick here for the New York Stock Exchange, as you can see here, for the first part of the morning, it's been up and down over the zero line, which is very indicative of a balancing market, just a market that is consolidating. One thing that one thing that, I'll kind of note is that the low ticks are, right around negative 600 and the high ticks are right around positive 600. So we're not seeing any extreme tick numbers to 1,000. Again, just indicative of a balancing market. Now we look at the Nasdaq. And actually, I should say before we move over to the Nasdaq, here in the afternoon, we're starting to see some tick distribution holding above the zero line, or trying to. So that's noteworthy. Obviously, a little bit more indicative to the stronger side of things for the bulls. But looking at your Nasdaq tick distribution here, it's all day, all over the place. Again, indicative of consolidation and balancing. But you'll notice that we got some lower tick values here in the morning session for the Nasdaq. So a little bit more weakness showing on the Nasdaq, but overall it's not necessarily weak. It's just a little bit weaker than the New York Stock Exchange is showing, but still pretty much balancing. So we come down to our breadth for the New York Stock Exchange. We are positive 1.6 to 1. You can see obviously that we have this slow trend starting to speed up a little bit here into the afternoon, higher and above the zero line. So of course we are positive on the day. Look at your breadth here for the Nasdaq and everything below the zero line. We sold off straight from the zero line out of the gate, chopped sideways for a bit, dropped lower, and now in the afternoon we're starting to push back up into the zero line, but we are yet below it. So of course we have a negative breadth, negative 1 to 1, but overly just chop. Negative 1 to 1 isn't really anything to read into. We would want to start seeing that negative 2 to 1, negative 3 to 1, and in which case a lot more stocks would be obviously declining than advancing. But we do come over to our advanced decline line for the New York Stock Exchange, opened with a gap higher and sold off straight into that zero line where it bounced off of that, faded below it a little bit in the afternoon, but getting back above it. So it's been above the zero line here on the advanced decline line for the New York Stock Exchange all day, except for a little brief period in the afternoon. You look at your advanced decline line for the Nasdaq, had a quick pop up and then a quick reversal right back below the zero line, and it's been trading sideways below zero all day long. So there's just simply more declining issues on the Nasdaq today than there is advancing. And obviously, that can be indicative of what we're seeing in tech. I'm looking through my charts right now. Facebook is down, consolidating at lows. NVDA is down, consolidating at lows. Apple is down at lows. AMD is down at lows. Netflix is down at lows. Microsoft is up at highs, but it's kind of out there on its own. So, we're seeing obviously a bit of a weakness in tech, which is driving on the internals there for the Nasdaq. All right, so now let's switch back over here, and I will run through, I will run through my market profile for you. Let's pull this over here. Just got to make sure I get it all on the screen for you there. All right, so let's change our pen color. And what you can see here on the market profile for the S&P E-mini futures, again, just a perfect bell curve distribution shape here, right? This is a picture perfect market profile, standard deviation bell curve shape. This is, really good stuff. This is, we're balancing basically above, all of yesterday's distribution down here, right? So we're balancing above that. That's noteworthy. And again, just what we're seeing right now in this market, that simply there's just no one really interested in selling. When we look at the overnight session, you can see that, we had this nice higher low pattern that is obviously indicative of strength as people started buying at higher and higher lows, and then price moved higher in the overnight session, actually breaking the RTH all-time high and putting in a new overnight all-time high, which that's right where we traded up into so far today, is just right into that overnight high. Now, for, obviously for the market, for the bulls, we definitely want to see, I think, this overnight low hold. So far, it seems like we are going to hold. We actually, the low of day came right into the settlement price from yesterday. So far, today's low is holding the prior day settlement price. But I think for the bulls, anywhere above that overnight low is definitely a good case for us going into the weekend. Now, for more of a macro view, if we zoom out on this and we zoom really, really far out, right, you can see that we've had quite a run up, and we are overbought short term, but there's nothing to say that this market can't continue to go higher, and until it gives us a reason not to, we should just continue to go with it. But moving down, you can see all of our VPOCs. It's virgin point of control starting to stack up. If you're not familiar, a virgin point of control is just simply an untested point of control from a prior day. So what we want to see is price action from an RTH, a regular trading hour session, come down and test a prior point of control. Until it does, it's called a virgin point of control. And you just kind of want to make note of all of these virgin points of control that stack up below us. You can see here on this day, there was a point of control, and on the prior day here, it came down and tested it perfectly. That literally that low of day was right at that point of control, and then we rallied from there. Okay, so any of those that remain untested during an a subsequent RTH session are noteworthy, and you zoom out, you can see that they're stacking up. Additionally, we do have a pretty substantial gap below us. Of course, we know that from our technical chart, but here's more and more and more VPOCs that are just kind of stacking up down there. So from a macro stance, yes, we are extended, but again, you look at this picture perfect bell curve distribution here, it's just consolidating. It's just balancing. We're simply finding more acceptance up here and no sellers, right? Quick look at your Nasdaq market profile, very similar shape here. You can see this overlapping distribution from the prior day. That, of course, is bullish and continues to just be more acceptance up here at these higher levels. Again, kind of zooming out, though, getting that macro view. We do have VPOCs below us, and we have multiple gaps below us. We have a pretty substantial gap here and another one down here, which is where we broke out from around that 13,158 level there. Okay, so that is just a quick look at your Nasdaq market profile. And then I guess we just saw it briefly there, but nothing really too special today on the day trade account. Just a couple of trades on Apple this morning that really just couldn't get any follow through on. Ended up working later, bounced off of no level at all, and so obviously missed out on the bigger move there on Apple, but that's okay. Caught a quick little scalp with just one contract today on Tesla for $60. Really incredible move when you trade those day of expiration contracts, and you get sudden volatility comes in, and the gamma really explodes on those contracts. Really cool to be able to trade that, but just a small day there. But overall, I had a pretty good week trading. So let's jump back over to our charts here, and we will go over let's just get over here. All right, so we'll go over our individual stocks that we like to trade, of course starting out here with Apple. So when we look at Apple's daily chart, let's just drag this over for you guys. Okay, so when we look at Apple's daily chart, again, it's a similar story where it's just consolidating here after this nice run up, and it's over 132.63, which is, it's definitely a significant level. Let's just zoom out on this chart for you guys here. That 132.63 is right here. It's the high of this balance area. Right, all of this balancing area here, we were looking for the breakout over the bottom of that balancing area, 126, and we got that. And the high of that balancing area is 132.63, and that's where we're trying to hold above right now. So to me, it looks like Apple probably wants to head up to this 137.98 area. That's going to be your prior all-time high from back here, where we had this, this big extended run up, and then a huge rejection off that level. We tested it again here. We had a failed breakout above it here. And then if we tighten the chart up a little bit, you can see right here where we back tested it after this failed breakout and rejected, and then that's when Apple really kind of sold off from there. So to me, it's looking like Apple probably wants to hold up here and maybe make one more run higher into that 138 area as a last run up into their earnings. I think as long as we hold over this 132.63 area, it still has a chance to have one more push up. It is basically flagging here, as you can see. So there's still a possibility for Apple to see a bit more upside here. So just kind of keep that on watch. Again, probably want to see it stay above that 132.63 area. But that one definitely looks good. And flip through a couple more here. So AMD, this one just can't seem to find its legs to the upside, even with good news. Yesterday got an upgrade. Big move higher. I caught a piece of that. That was really nice, but you can see getting rejected once again off that 50-day. Overhead, you've got this pivot here at 84.75. Really needs to get over that and then over 87.29 before you got a nice size pocket here to work with. So You know, AMD, it just can't seem to get out of its own way to move any higher. So for now, watching that 84.75 for any potential upside, and then 87.29. To the downside, again, you know, I don't think really much to do with it unless it comes back down to this this prior gap here that it has yet to fill. So we still have an unfilled gap here. And if it does come back down there, that would be something to watch. But for right now, probably looking at that 84.75 to see if we can ever get back up to it or not. We already saw Amazon. So yeah, Amazon basically just pulling back and resting. I would set an alert at 34.34 because I think that if we can see Amazon start to move above that, decent sized pocket with almost no resistance here, maybe 34.50 area. There might be a little bit of resistance, but not much. I would say that decent sized pocket to work with there up to 34.96 or 3500, and then the all-time high would be over that. So you could set an alert there as I have and just wait and see if it can get up there. Obviously, it needs to rest a little bit after this big run up. Boeing, this one honestly not really much to do with. You've got this trend here, but where we've got this candle anchored here, it's a low volume day, so I wouldn't put too much, I wouldn't put too much import into this trend, but just kind of aware that you do have this downtrend here, and it is still trying to hold that 244 level right there. But again, not really much to do with that one. Alibaba, so it did the opposite of what I expected here. It gapped really higher after that news came out about the lawsuit. I guess it wasn't as bad as investors had feared. So it did gap higher and promptly got rejected back down below that 240 level. Yeah, I don't see much to do with the stock right now. It's kind of stuck in between your 50 and your 100-day here and your 9 and your 20-day there. So really, it's going to have to start getting above that 100-day in this 250 area to start moving up here for the upside. And for the downside, again, you've got your moving averages here and all the support down here. So 220 would be the level I'd be looking at on the downside. You know, we'll move this trigger point here, but just aware that there is a 100-day sitting right over here. So it's got work to do both ways. So I just don't see much to do with that stock right now. So moving over to BIDU. This one, you know, after this huge drop so far hasn't done a whole lot of anything. It is just continuing to be rejected by the 9-day here. If we start to see it drop below probably that low right there, around 207.69, if it gets momentum, you know, and some volume coming in, it could get a move lower. But right now it's really trying to hold there. To the upside, you know, 230. I've got an alert set at 230 for this pocket here if it wants to do it. Until it gets, you know, to 230 and above, I'm not really interested in it long. You could try short under 207.69, but again, you're going to need volume. You're going to need momentum. You're not going to want to see it just kind of dip below and get bought back up. So right now, not much to do with that one. I would just focus on the 230 if it even gets there, and maybe we get some nice short squeeze effect moving inside of that pocket. But obviously, it's got work to do before we get there. Facebook pulled off of a new all-time high. It is currently trying to hold that prior all-time high from way back here. Okay, so 304.67. Probably want to see that hold, but for right now, not much to do with it. Probably wouldn't be interested in shorting it because you got the 20-day just below. It might just kind of trickle down into that. For me, the bigger play would be to look for it to get back up to all-time high and maybe another move higher. We'll see if it wants to or not ahead of their earnings. MU is one that I honestly haven't traded in a long time, but it's one that we always kind of watch. It's interesting that, you know, it actually hasn't tested its all-time high that goes from way, way back. You know, you look at your really macro view on this, and that all-time high on MU goes all the way back to like July of 2000, guys. That's a long, long time ago. So this is a massive cup and handle pattern that could be possibly developing here, but obviously we don't know yet. What I would mention on this is that given that it's been so long since that last all-time high was put in, that most likely it will reject the first time it tests it. Now, technically, we haven't tested it, but basically we've gotten close enough that it's possible that we are pulling now. Maybe we do form some type of a handle, or maybe we break out and then form a handle above it. But just kind of, I've got an alert set there, right? That's a significantly macro level, that all-time high. And worth noting, if we were to see MU get some kind of a very macro breakout from that long time all-time high that goes back, 20 years ago. So very interesting, but right now not much to do with it. Netflix, this one, I was watching this 556.86 level that again comes in from this day here when they had earnings released. Look at the size of the volume. I don't know if you can see that. You can't. I'm hiding behind it. Hold on a second. Let me zoom out the chart. There you go. All right, so look at the volume here on this day when their earnings were released. So anytime you have big volume like that, the highs and the lows from a day like that are going to be significant and something to pay attention to. So you can see that that was kind of the level I'm looking at there, that 556.86, and we've come up into it and rejected, and we pulled back, which is good. Now probably want to see this 543 hold. If we start to curl back up into that 556, maybe we start to see a breakout into this pocket, ideally to 575. You will probably have some resistance here first, 566, worth noting, but 575 would be the area I'd be looking for, and then your next pocket would take you up to all-time high. So let's see if it wants to do that. Obviously, to the downside, you've got a congestion of support down here and moving averages and everything else. So I'd be more inclined to see if we want to curl back up over that level. But for right now, obviously, it's Friday, and it's probably not going to happen this week. So we'll see what next week brings us. Take a look at NEO. So this one broke this minor trend down here, tagged the 200-day here, and so far bouncing off of it. So, you know, this could be a dead cat bounce. You can see how it's been riding the 9 and the 20 EMA, or the 9 EMA and the 20 SMA down for quite a bit, and continues to reject those. So if we end up falling back below that 200 SMA, it seems likely that it will visit this 3191 from that pullback there. And then below that, I just don't see a lot of market structure until you start getting down to, you know, 28, 27, 26 price range from back here. So it's possible, but that obviously is going to be very important to hold that 3191 if it does get down there. Otherwise, to the upside, still not really interested in doing anything until it starts getting back above 42. But now you've got that 50-day that's starting to work its way down inside of this pocket. So kind of less of a juicy idea now, in my opinion. I've still got an alert set there, but right now, just nothing to do with NEO. NVIDIA is definitely one I'm interested in. Massive move here, big move. So it's extended. It needs to relax, clearly. It broke above... let's see. Yeah. So this was the prior all-time high here. It broke above that, came back down and tested it a couple days ago, and then promptly ripped all the way back up and put in a new all-time high, which we need to readjust here. And starting to pull back a little bit today, consolidating so far just an inside day, which is bullish, right? If we can just kind of relax up here for a little bit. But on a macro scale, right? Let's look at the weekly chart on this, and let's just kind of clear our drawings off. This is something worth noting, right? So you have this long period of consolidation after this big run higher. Okay, so what we're seeing here is the start potentially of a big macro breakout that could continue to go higher. Plus, you've got kind of a catalyst in the news that could help drive this, in the sense that we have a lot of semiconductor shortages, which obviously is going to drive prices higher. So there's a chance that NVIDIA could still continue to head higher if this macro breakout is in fact confirming what we're seeing here. So I do like this. I think that NVIDIA certainly has potential to go higher as long as the market continues to hold up. Obviously, if we get a decent size pullback in the market, NVIDIA is probably going to pull back with it. But in all honesty, it needs to pull back a little bit. So, you know, I wouldn't be surprised to see us have a bit of a relaxation period here, maybe a bit of a pullback. But I'm definitely interested to see if this macro breakout is in fact going to confirm to continue higher here on NVIDIA. So maybe worth watching that in the coming week. And Square, big run higher, couldn't quite get up to the all-time high. And pulling back, probably want to see that 250-250 level hold right now, testing the 9-day, but a much-needed pullback. So we'll see what Square wants to do. Again, remember, all of these stocks do have earnings coming up here soon. So these are often big run-ups into earnings, and then they're going to start relaxing, and we'll wait to see how the earnings come out and how they respond after that. But for Square, again, probably want to see that 250-250 hold there. And the last one here is Tesla. So taking a look at Tesla, you know, this one was a little bit disappointing, I'd say. Now, this one is, for me, I had a great trade on it 2 days in a row. On this day here, when we got the gap over the 50-day, and well, not gap over the 50-day. We actually opened up right underneath the 50-day and then promptly ripped higher. Let's go to that day here. Here we go, right? So this is your 15-minute chart, but you can see we opened just below the 50-day, and then we promptly broke above it, and I was able to grab the 715 calls on that one, and the target on the trade was 744. I paid myself on the way up, and I held one last contract to just shy of 744. It was right here whenever I took that last contract off because it was trading right up into, I believe it was R4 or was it R3? It was a resistance level from the pivot point study, and it was just shy of the 744. And given the size of the run that we made, I decided, yeah, that's probably enough for me. I'm not going to hold all the way to 744. Obviously that's a shame that I didn't, because huge move even after that, just kept going and going. But you look at the daily chart, this is a nice strong day. This is great. We got that big expansion, finally breaking free of all those moving averages. And then the very next day we gapped higher right up into 780, which is, key resistance from this pullback day here. So obviously that's going to be key. We gapped higher, traded right into that, and promptly rejected and gave back so much, right? In that one day. Not ideal. That's not what you want to see for the bulls. Obviously it would have been better if we could have consolidated and just kind of held up here around, between 780 and 762. But no, I mean, we just gave so much back. I don't know how much of that had to do with Cathie Wood selling some of her stake in Tesla to buy coin. Who knows? But all I know is that we gave back a lot of that day, and that's not really good. And so far, the last 2 days and today included, really lackluster. Tried to make a push today, caught a quick trade on it, as you saw there, but stiffly rejecting so far off the 744. So obviously for Tesla, it needs to hold above these moving averages at a very minimum. It needs to stay above the 50, the 9, needs to stay above all of those. But until it gets back up here to 780, I just don't see a lot to do with it on the long side, unless maybe we catch a scalp through this pocket here in the 762 to 780. So that's going to wrap it up, guys. I believe I covered everything that I wanted to go over with you. Like I said, let me know if you are interested in doing some videos kind of like this, maybe even as a live stream, so we could kind of interact with each other. You could ask questions, and it could be a very helpful session for you guys. Anyways, I hope you guys had a really great trading week. Certainly wish you guys a really good weekend, and let's have another great green trading week next week. So thanks for tuning in. Take care, and we'll see you in the next one.